I mean, again, we are back at record high levels. The overall texture of the market, I mean, it has improved quite significantly this week, right? The big rally, the big relief at least, came yesterday after Fed refused to use that H word in its commentary, rate hike, and said that the first course of action will be a rate cut. For now, the stance is higher for longer. But considering the markets are at record high, we are at least knocking at 22,800. Do you think that we have enough momentum to get to potentially 23,000 or higher from here on?
Hi, Suyash. First, a very good morning to you and all the viewers. Always a pleasure to be here. Well, to answer your question in one word, yes, the market does have that momentum to, conquer 28,000. And, once that is taken out, perhaps a 23,000 also is on the card. If that 22,800 is taken out, then 2,300 might come, 23,000, I'm sorry, might come sooner rather than later. However, the way we've put it in our advisory report today, the texture of the market is two steps forward and one step back. If you see, this market has actually been kind enough to give you that dip every now and then to quote and accumulate. But it is also prudent that you keep booking profits at higher level. If you see the kind of volatility that we've seen either on an intraday basis or let's say on a day closing basis, what's happening is that the market is giving you those sharp pullbacks as well. So if you get stuck on the wrong side of it, you might feel a little bit of an angst. Hence, our suggestion is to buy the dip, but also, as a part of your strategy, continue to keep booking profits because the market is giving you that opportunity as well. Now,
Right.
we believe that there is a possibility that the markets could see a near-term top, around the election results, and depending on how the results come around, it could be either before or after. From a positional standpoint, uh, the risk reward ratio is not favorable for a big position, but given the kind of moves that we've been seeing, intraday bets or let's say weekly bets, expiry to expiry, perhaps is the way to play this market.
All right. And Nifty Bank, I mean, that has been instrumental in this recovery that we have seen from April lows. I mean, in April alone, Nifty Bank witnessed one of its best months in the recent past, surging over nearly 5%, Kush. But, yesterday, it was Nifty Bank that capped the upside. It prevented markets from going higher. But, again, we are coming back and we are circling back to that milestone of 50,000. I mean, how difficult do you think it will be for us to climb over there? Because there are some problems. RBI has taken some regulatory actions on certain banks, which is also putting some pressure. How soon can we get to that 50,000 mark? Kush.
Well, I think what we saw 2, 3 days ago, that stupendous run on the bank nifty was perhaps one of the biggest that we've seen in the last couple of months, right? So after such a sharp up move, the follow through perhaps becomes a little difficult. Also, if you can bring up, let's say, the daily chart for the bank nifty, late January, early Feb, if you draw a channel from there, then the bank nifty is in an upward sloping channel on the upside for the last four sessions, including the day when we hit those, 11, 1200 kind of a move on the bank nifty. We've been hitting that upper band of, the upward sloping channel, which means that there is resistance at current levels. Now, truth be told, 50,000 sounds like a very fancy number. For me, it's more of a psychological mark that the index has to hit. But beyond that, we're looking at a level of 52,000 for the bank nifty. So once this zone of 49,500 to 49,900 is taken out convincingly, I think we're looking at the next level as 52,000. As I said, 50,000 is more of a shagun ka round number, right? Other than that, other than that, what we're seeing is bank nifty still playing catch up for 12 months from here on. If you see, Nifty is up close to 26, 27%. The bank Nifty is up only about 16%. So there is a lot of catching up that the bank Nifty has to do anyway. So what we're seeing in terms of this current rally is more of catch up. While it has been helpful in terms of pushing the index also higher and the market sentiment, I think 52,000 is the next level to watch for. We think there is some room on the upside. Also, I'll take 30 seconds more. When you mentioned about RBI, playing the strict regulator that it is, sometimes said out to be. I think what it's done with Bajaj Finance today is perhaps a more positive,
Right.
because what the market is reading it as is that if you do follow the steps, or you do consider the suggestions that the RBI is making, they are more than happy and more than willing to lift any kind of restrictions. So that is also being taken positively. And, we've seen time and again, whatever checks and balances RBI has brought in place has only been for the, consumer benefit. So you can't really complain there.
All right, and speaking on Bajaj Finance, of course, we are absolutely on point in pointing that out that, because a lot of the analysts were saying that, they were scared about how much time RBI will take before it, lifts those bans. It only took 6 months. Remember, before that, HDFC, I think it took almost a year more than that before RBI lifted its curbs on HDFC Bank. So, big relief coming in from for Bajaj Finance, and it has rallied nearly over 6% in fact. And just to jog back our memories, RBI on November 15th, 2023 directed Bajaj Finance to halt loan issuance through its e-com and Insta EMI cards. The central bank had imposed these restrictions due to a lack of transparency and disclosure of conditions like fee charges and a recovery practice in a key fact statement, which is a crucial requirement for digital loans. But Kush, I'll come back to you. We are seeing a strong resurgence in Bajaj Finance today. I think we are back at the levels where we were on November 15th when that big drag came along. Do you think this momentum could continue and perhaps take Bajaj Finance higher from here on? Because it's the big news is certainly a sentimental booster for the investors.
Yeah, I think you pointed out correctly that it's a sentimental booster. Now, I'm not sure if this rally has more steam to it. A couple of points. One, that now with the competition intensifying, something like a Geo coming around, you'll have to start questioning whether Bajaj Finance can really give you those kind of returns that it did over the last decade or so. Perhaps a little unlikely. Can a Geo do that? Maybe not to the same magnitude, but perhaps better than Bajaj Finance. Hence, that competition, is very clearly kicking in, not only in terms of the business, but also in terms of the capital allocation. Also, what happened is that this stock has been under pressure, and every rise that has come around has been seen as a selling opportunity. Now, as a standard disclaimer, I do hold Bajaj Finance in my portfolio for a while now, but I have significantly pared my own holdings in this and shifted some of it to Geo. Now, also from a technical front, if you draw a trend line from the October highs, from the last year October highs, it's almost precisely in that downward sloping trend line that the stock has hit the high today, 7,400, and then slipped lower from there. So while you're seeing a 5.5% uptick, the stock is actually about a couple of percentage points down from the day's high. Now this is, I think, the theme for the stock. Until it crosses that 7,400 level convincingly, sustains above that for a while, I think it's going to remain under some sort of a pressure. So for me, what I would do is, if I have holdings in Bajaj Finance from, let's say, slightly lower levels, I would take this opportunity to book profit partially, if not fully.
We are in the middle of the earnings season. Today we have some big ones from the Nifty 50 pack of companies. Britannia Industries and Titan will announce their numbers, and Aarti Industries, JSW Infra, Godrej Properties will be some of the companies from the broader markets. They will also report their Q4 report card. But the action has been also very stock specific because a few key heavyweight companies reported their numbers after the market hours yesterday. Coal India was one of them, and Amit, the stock is trading about 2% higher this morning. As far as the results, the report card is concerned, it was a bit of a mixed bag.
Now, it's a Maharatna company like you of the government, like you mentioned, and there have been price cuts in coal. But the numbers that have come in, they have been in line with what the market expected. As far as net profits were concerned, they were expecting around 27%. Net profits have come in year-on-year increase of 26%. Where there has been a discrepancy is revenues. Now, revenues have gone down year-on-year by 2%. The market was expecting an increase by around between 8 to 9%. EBITDA was expected to go up almost 45%. It has gone up only 21.5% year-on-year. Now, despite the cost cuts, the increase in profits has been on account of cost efficiency and benefits from changes in accounting for stripping activities for their open cast mining. Kush, where do we take Coal India from here? They have not come up in line with what the market expected as far as revenues are concerned. They are going down. Do you expect this just to be a blip, or it is expected to rise post-elections with new infrastructure projects coming on?
I'd go with the latter. Also, the fact that we're fairly bullish on the entire power space. If you look at a lot of names in this space, how they've been doing well. I don't think Coal India will, remain an exception to that. We've seen some sort of a consolidation in this stock, but that has also been with a positive bias. For me, despite the kind of mixed set of numbers that have come out, what's encouraging is that 460 was a line in sand that the stock wasn't able to take out. Today we have been today the stock has been actually able to move past it and sustaining above it. So I think perhaps the momentum could be a little a miss here, but on the whole we think that the stock is the trajectory for the stock is upwards. From a near-term perspective, we think 485 to 500 are the levels that the stock could perhaps head to. Most likely, as you said, perhaps post-elections once some new projects are announced.
Okay, and Kush, but before we let you go, what are your picks for our investors today?
So a couple of them. First is BSE. Now, despite the kind of news that we had seen, the stocks actually recovered quite smartly in the last couple of days. I know at the moment the stocks, marginally in the red, but overall we think if someone wants to re-enter, has someone had missed out on the last, rally that had come in the stock, I think BSE remains a buy from, a positional standpoint more so. 2950, 3050 are the targets that we're looking at. 2700 to 2750 is the support zone, so that should act as your stop loss. The other stock that I have is Hind Copper. Here too, we are seeing some cuts today, but that is more of a profit booking, a consolidation event. Other than that, the stock is in an upward trajectory. 398, 405 are the targets, and 380 to 385 is a support zone for the stock. So that should act as a stop loss.
All right, those are the top picks from Kush Bohra. Sir, I have one final question for you actually, because if you look at the markets now, they have actually paired most of their pre-opening gains, and whenever the markets, they see a very strong start, possibly a gap up opening or a strong start like today of about 100 points, what should retail investors do? Because if you are really betting on the upside, you need to have very strong conviction after a strong opening to perhaps try to ride the market on the upside, but there is not much left often for retail investors. What's your advice for them, sir?
So yes, it's almost interesting that it's happened more than a couple of times now. That I have a 15-20 minute interaction with you, always a fun one. But when I start the interaction and by the time I end it, the markets have perhaps acted exactly in line with whatever we discussed. So perhaps that's a lucky charm for me and perhaps for your viewers as well. See, I just said that this market is in a two steps forward and one step back kind of a setup, right? Earlier in the morning, one of the media outlets had mentioned that if you have long positions from yesterday, book them out early in the morning and start your weekend early. The two steps forward, one step back theory is also playing out. I think you should have conviction and belief in the market. I don't see a very big downside in the market, at least until the election results are out. Unless something happens with the geopolitical front, it's a different story. But I would buy this dip. I would wait for maybe some more time. Perhaps the 20 to 600, 20 to 650 kind of a zone is a stronger buy zone for the market. But I would go out and buy the dip on the Nifty and on the Bank Nifty both and hold on. The kind of moves that we've seen in the last couple of weeks does put in some sort of a confidence. It was only the DIS that were parking in money. FIIs, although small in magnitude, have also started trickling in. So that will also perhaps help the market cause. So buy on dip still remains, but I will reiterate, continue to book profits as you go along, because the markets will give you these kind of sharp down moves also.